Hi, in this video we will be talking about is real estate the best investment of the 21st century? Watch this video to the end to learn whether real estate remains the best investment option available. Welcome back to the International CEO. Investing in real estate has long been viewed as a hallmark of personal wealth and financial stability. The 21st century has seen massive shifts in the economic landscape, influenced by technological advancements, demographic changes, and global economic conditions. This has led many to question whether real estate remains the best investment option available. To address this, it is crucial to consider various aspects such as market performance, comparison with other investment vehicles, risk factors, and future prospects. Market performance of real estate. Since the turn of the century, real estate has generally been a strong performer in many markets worldwide. Despite the catastrophic impact of the 2008 financial crisis, which was triggered by the collapse of the housing bubble in the United States, real estate markets have largely recovered and, in many areas, have seen significant appreciation in value. According to a report by the Federal Reserve, the average sales price of houses sold in the U.S. has more than doubled from 2000 to 2020. This recovery and growth have been fueled by lower interest rates, increasing demand, and limited housing supplies in desirable areas. Real estate versus other investments. When compared to other investment vehicles such as stocks, bonds, and commodities, real estate offers unique advantages. These include the potential for passive income through rental properties, tax advantages such as depreciation, and the ability for leverage through mortgages which can enhance returns. Moreover, real estate is often praised for its low correlation with other asset classes, providing diversification benefits to investors. However, there are also notable downsides. Real estate requires significant capital outlay up front, has higher transaction costs, and is less liquid than stocks or bonds. The returns on real estate investments are also highly localized and can be affected significantly by changes in local economic conditions and government policies. Risk factors in real estate investments. Investing in real estate comes with its own set of risks. These include market risk related to the cyclical nature of real estate, liquidity risk, and regulatory risk. The impact of economic downturns can be harsh, as seen during the 2008 crisis. Additionally, real estate investments are susceptible to changes in tax laws, zoning regulations, and other governmental actions. Furthermore, the rising concern about climate change introduces new risks to real estate investments, particularly in coastal areas prone to flooding or other weather-related impacts. Investors must now consider environmental factors and sustainability issues when making investment decisions. Technological impacts and future prospects. The 21st century has also brought significant technological advancements that impact real estate. The rise of platforms such as Airbnb has changed perceptions of residential property as an income-generating asset. Technology in the form of real estate apps, online marketplaces, and virtual tours has made real estate more accessible and transformed the way transactions are conducted. Looking ahead, the real estate market must adapt to a changing world where urbanization, remote work trends, and demographic shifts play pivotal roles. The increase in remote work, for example, could lead to a decrease in demand for commercial real estate but boost demand for larger residential properties in less dense areas. To determine whether real estate is the best investment of the 21st century, one must consider personal circumstances, investment goals, and risk tolerance. Real estate offers tangible assets, potential for stable income, and a hedge against inflation, which are attractive qualities for any investment. However, it also requires a considerable commitment of time, resources, and management. Comparatively, other investment vehicles such as stocks or cryptocurrencies may offer higher liquidity and potentially higher returns but come with their own risks. The ideal investment portfolio will likely include a mix of assets, including real estate, tailored to the individual's financial goals and market outlook. Ultimately, while real estate remains a strong contender for one of the best investment options of the 21st century, investors should be wary of considering it the best in all circumstances. The evolving economic, technological, and environmental landscape will continue to shape its viability and attractiveness as an investment choice. The allure of real estate investment has been a constant through the ages, but the dynamics of the 21st century have introduced both new opportunities and challenges. As we navigate through technological advances, economic fluctuations, and socio-political changes, it becomes essential to delve deeper into the reasons behind real estate's enduring appeal and its feasibility as the premier investment choice in today's era. Real estate's performance as an investment strategy cannot be adequately assessed without considering the broader economic context. The early part of the 21st century was marked by rapid globalization, which increased the mobility of capital and labor. This has had a dual effect on real estate markets around the world. In emerging markets, increased foreign investment has led to real estate booms, often in urban centers. In developed markets, global capital flows have contributed to skyrocketing property values in major cities, making real estate an attractive investment for both domestic and international investors. Real estate and inflation hedging. One of the compelling reasons to invest in real estate is its potential as an inflation hedge. Real estate values and rental income tend to rise with inflation, making it a valuable asset in maintaining purchasing power. This characteristic is particularly appealing in the 21st century, as monetary policies in response to various financial crises have often led to concerns about inflation spikes. Despite periods of low inflation in many developed economies, the potential for sudden increases due to policy shifts or supply chain disruptions, as evidenced during the COVID-19 pandemic, keeps real estate investment relevant. The influence of demographic trends. Demographic shifts significantly impact real estate markets. Aging populations in countries like Japan and much of Western Europe affect demand for different types of housing. There is an increasing need for senior-friendly accommodations, which presents a specific market opportunity. Conversely, in countries like India and Nigeria, where there is a burgeoning youth population, there is a sharp increase in demand for new housing. Understanding these demographic trends is crucial for investors aiming to optimize their real estate investments. Technological innovation in real estate. The 21st century has seen a wave of technological innovations that have transformed the real estate sector. From the proliferation of property technology, PropTech, that includes smart home technologies to platforms enabling real estate crowdfunding, the barriers to real estate investment are lowering. These technologies not only enhance operational efficiencies but also democratize access to real estate investment, allowing smaller investors to participate in markets previously dominated by large entities or wealthy individuals. Urbanization and its impacts. Urbanization continues to be a dominant trend globally, with more people moving to cities in search of better economic opportunities and lifestyles. This ongoing shift drives demand for residential and commercial real estate in urban areas, making city real estate particularly valuable. However, the trend towards remote work, accelerated by the pandemic, has started to challenge the primacy of urban real estate by increasing the viability and attractiveness of suburban and rural areas. Sustainability and real estate investment. Environmental sustainability has become a critical consideration in real estate investment. The real estate sector is a significant contributor to carbon emissions, and there is growing pressure from consumers, investors, and regulators to reduce this impact. Sustainable building practices and energy-efficient designs are not only necessary for regulatory compliance but are increasingly demanded by tenants and buyers. Investments in green real estate could yield substantial returns due to these shifting preferences and the potential for regulatory incentives. Real estate market volatility and risks. While real estate has many attractions, it is not without its risks. Market volatility, influenced by economic downturns, changes in interest rates, and unforeseen events like the pandemic, can drastically affect property values and investment returns. Furthermore, real estate liquidity issues can present significant challenges, especially during market downturns when assets might not be as easily sold without considerable value loss. Diversification in real estate. The principle of diversification is well served by real estate due to its low correlation with other asset classes like stocks and bonds. Including real estate in a diversified investment portfolio can reduce risk and provide a more stable return profile over time. Real estate's tangible nature and the constant demand for physical space, whether residential, commercial, or industrial, underpin its fundamental value. Conclusion. Real estate's position in the investment pantheon. Determining whether real estate is the best investment of the 21st century depends on multiple factors including market conditions, personal financial goals, risk tolerance, and economic forecasts. Real estate undoubtedly offers unique benefits that are difficult to replicate with other investment vehicles. such as stable cash flow, inflation protection, and substantial tax benefits. However, it requires active management, substantial capital, and a deep understanding of both local and global market conditions. The ongoing evolution in global economic patterns, technology, and consumer preferences ensures that real estate remains a dynamic field with both opportunities and challenges. For many, it will continue to be a cornerstone of investment strategy, but it should be approached with caution and diligence, reflective of its complex nature. Investors looking for the best investment of the 21st century should consider real estate as part of a broader, well-rounded portfolio to mitigate risks while maximizing potential returns. Thanks for watching. If you found this video helpful, please give it a thumbs up, hit that bell, comment, and subscribe for more content on the International CEO. See you next time.